Hello friends, today we are going to analyze PepsiCo, which is a dividend king. That means that they have been growing dividends every year for over 50 years. But does it automatically make it a good investment? Well, to answer that question, we will take a closer look at the company, we will calculate the intrinsic value and compare it to the current price. But before we do that, we should realize just how massive this company is. PepsiCo is an American multinational food, snack and beverage corporation. PepsiCo was formed in 1965 with a merger of Pepsi-Cola Company and Frito-Lay Incorporated. PepsiCo has since expanded to an immensely diversified range of food and beverage brands. The company is made of 23 brands, including Pepsi, Diet Pepsi, Mountain Dew, Lay's, Gatorade, Tropicana, 7-Up, Doritos, Cheetos, Mirinda, and many, many more. PepsiCo products are distributed across more than 200 countries, and it is the second largest food and beverage business in the world. So first, let's see who owns this company. Individual insiders, that is an X with just 0.2% of the company owned by individual insiders. And we would like to see this number over 2% because then we know that the management has some skin in the game. And are individual insiders buying? That is an X. We see a lot of sale transactions from insiders in the last 9 months. And do super investors own this company? That is a check. 11 super investors own this stock, including Terry Smith, David Rolfe, and Thomas Russo. And are super investors buying right now? That is an X. In the last quarter, super investors bought just over 7,000 shares and sold over 650,000 shares. So, at the first glance, it does not seem like a very popular stock at the current time. And how is the financial health of PepsiCo looking? Return on invested capital. That is a check at 13.1%, and we want to see this number higher than 10%, so it is a nice return. And what do we know about free cash flow growth? That is an X. In the last 10 years, the annual growth is at 2.3%. And just as with return on invested capital, we would like to see the number higher than 10%. And what do we know about net profit margin? It is a check. PepsiCo's net profit margin is 11.6%, and the sector median is just 4.2%. So we see that they have a nice pricing power over most of their competitors. And now let's take a look at shares buyback. It is a check. In the last 10 years, they bought back 11.8% of their shares. So that is really nice. You don't have to spend any extra money, and just by keeping your shares, you own a bigger part of the company. And the debt? It is an X. It would take them 5 years to pay the long-term debt with a current free cash flow. And we would like to see this number lower than 2 years, so not a perfect situation here. And now let's take a look at the dividends. Dividend yield is 2.5%, and for every share you get annually $4.60. But the dividend yield is not the only thing we should concentrate on when looking for a dividend stock. An extremely important thing is the payout ratio. And that is an X. The payout ratio is 66.9%. And we want to see a payout ratio somewhere between 20 and 50%. The fact that it is higher is really worrying. It means that the dividend can at some point become unsustainable and that it is probably slowing the growth of the company. And what about dividend growth? It is a check at 7.4% 5-year growth rate. And PepsiCo is growing the dividend for 50 years. So just this year, they entered the most exclusive club of dividend kings. Okay, so now let's value this company using a discounted cash flow formula. We will have to estimate the growth of PepsiCo for the next 10 years, and we will make 3 scenarios of this growth. So in the low scenario, we will estimate a growth of 3% for the next 5 years and then 2%. In the medium, 5% and then 3%. And in the high scenario, 8% and 4% after the first 5 years. So with such estimates, the intrinsic value in the low scenario is $46, $55 in the medium, and $67 in the high one. But these are not the prices we should be buying this company for. We have to always add a margin of safety. I use a 30% one. And with such a margin, we get $32 in the low scenario, $38 in the medium scenario, and $47 in the high one. And the current price is around $179. So it is all in the red. And the price is not even close to the intrinsic value. But we do have to remember that we usually have to pay extra for such a secure company and a dividend king. So such a price should not be a big surprise. PepsiCo is a massive company, diversified over 200 countries and over 20 brands, and with a lot of pricing power. So it is very stable. It is also a dividend king, so most probably they will try to continue this trajectory of growing the dividend every year, even though the payout ratio is a bit worrying. Unfortunately, the price is pretty high. But like I said, if you are getting a premium company, in most cases, you have to pay extra. So let me know in the comments, what do you think about PepsiCo? Is the current price justified or is it simply overvalued? That's all for today. Thank you for watching and remember to subscribe to the channel and like this video if you found it interesting. Thanks again and bye-bye.